Good evening everyone. This is a quick recap of KYC for students appearing for Concurrent Audit Certificate exam to be held on 17 Jan. This session is for knowledge enhancement. Being a revision class, I will try to finish ASAP. Let's start. KYC guidelines are issued by RBI under section 35A of the BR Act. KYC is Know Your Customer. Objectives of KYC, AML, CFT and risk management. AML is anti-money laundering, CFT is combating or financing of terrorism, and third one is risk management. Then we have a steps in money laundering. There are 3 steps: placement, layering and integration. Placement means introduction of funds into the banking system. Layering means doing multiple transactions to make the illegal funds to be legalized, like to hide the source of the funds. Then integration means that funds which have already been introduced, that are now integrated with the legal money. Now the placement is also known as smurfing or structuring. Integration is also known as extraction. Then PMLA is a Prevention of Money Laundering Act 2002. It was implemented on 1st July 2005. Remember, Act was 2002, implemented in 2005. Then recommended by Financial Action Task Force, FATF. FATF was in Paris in 1989 in G7 summit. It has given 40 recommendations in 1990. The main recommendation important from exam point of view is 21. 21 says tipping of the confidentiality. Then components of the KYC policy, there are 4 components: CAP, CIP, monitoring of transaction and risk management. CAP is customer acceptance policy. CIP is customer identification procedure. Then third is the monitoring of transaction, then risk management. For KYC, customer means a person or entity that maintains an account with the bank. Beneficial owner is a natural person. Walk-in customer if transaction is rupees 50,000 or above. If a customer, like a person who is not maintaining an account but is doing a transaction with the bank, then more than 50,000, KYC has to be done. Then we have the beneficial owner. Beneficial owner must be a natural person. For a limited company, a natural person with greater than 25%, remember it is greater than, not greater than, equal to. So greater than 25% share in capital and profit, that is in limited company. And for others is partnerships, unincorporated associations or trust. It is a percentage is more than 50%. Remember, it is not more than equal to, it is more than 25% and more than 15% share in capital and profit. Then KYC is also to be done on the walk-in customers if amount of transaction is greater than equal to 50,000. Accounts of the self-help group. Self-help groups, KYC only of the office bearers. When we are opening the saving bank account of the self-help group, only office bearer KYC suffice and not on all the members. But while giving them loan, that is credit linking, then KYC of all members is required. Then RBI has introduced digital KYC, that is capturing live photo of the customer and OVD by an officer of the bank along with the latitude and longitude of the location where offline verification cannot be done. Remember, this digital KYC is done by an officer of the bank. It's not like anyone can do. It's only the officer of the bank who can do this verification. Then the third one is video based CIP, that is VCIP. Then video based CIP, customer identification procedure with the facial recognition and customer due diligence by an authorized officer. Remember, there is an authorized officer. In digital KYC, it was any officer of the bank. Here, the authorized officer of the bank. It is by real-time, secure, live, consent-based, audio-visual interaction with the customer to obtain identification confirmation, information, documents for customer due diligence purpose. Now, for whom video-based CIP can be done? CDD for new customers, for individual proprietorship, authorized signatories, beneficial owners, or for the existing customers who have opened the account through Aadhaar based OTP or non face-to-face customers. Any customer who is not visited the branch but has opened the account through other modes, for them KYC could be done through video based CIP. Then periodic updation. For the existing accounts, KYC could be done. What does mean a transaction? Transaction means anything done with the bank. It includes Just not only credit or debit, anything like opening of an account, use of a safe deposit box, use of a locker, entering into any fiduciary relationship, any payments or modes, any gift, transfer, safe custody, mortgage, hypothecation, loan, anything, any event done by the bank, even issuance of the draft, anything done in the bank is a transaction. Then the other one is shell bank. Here we have a shell bank. Give me a second. Shell bank is incorporated in a country, which is incorporated in a country where it has no physical presence or is unaffiliated to any regulated financial group. It means this is a shell bank. Remember, shell banks are the banks which is incorporated in a country but there is no physical presence. So these are named as a shell bank. Then RBI has categorized in the risk classification is there for all the accounts of the customers. It's like a risk profiling. It is low risk, high risk and the medium risk. Low risk customers are salaried, small accounts also BSBDA, that is basic saving bank deposit accounts, then government departments, regulators, statutory bodies, election commissions. Then high risk customer will be non-resident individuals, high net worth individuals, trusts, NGOs, club societies, limited companies having close family shareholdings, politically exposed persons of the foreigners, then bullion, dollar and the jewelry, diamond merchant. Then medium is not defined anywhere. Then medium is not defined anywhere. Medium will be a sole proprietor, HUF, partnership, limited company, stockholders, pawn shop, inoperative, auctioneers, NBFCs, import or export. Remember, inoperative accounts are treated as a medium risk customers. Then we have bank should review the risk profile once in 6 months, that is twice in a year. It is as per the RBI. Then opening of the account. Then customer due diligence is required. What are the documents we need? Copy of an OVD. OVD is an officially valid document. Recent photograph, PAN or Form 60. The officially valid documents, which are officially valid documents: passport, driving license, proof of possession of Aadhaar number, voter identity card, job card issued by Manrega, letter issued by NPR. Remember, Aadhaar is a possession of Aadhaar number, not Aadhaar number. Then which are not there, the important question here comes: ration card, PAN card and Aadhaar card. These are not OVDs. Aadhaar number is a 12-digit number. Aadhaar number is a 12-digit number. It is not mandatory unless some subsidy benefits to be taken from the government. It can be given by the customer voluntarily. Bank is required to inquire the financial status of the client, not for the family, only for the client. Then if you have documents from non-resident, the same documents to be taken, that is PAN, Form 60. You have one recent photograph, copy of an OVD with the details of the identity and address. Then address, who will be given address details? That is the foreign embassy or mission in India. Then if there is a difference in present address and the address in the OVD, we have to take the document as a proof. Utility bills not more than 2 months old. Property, municipal tax. Utility bills could be electricity bill, water bill or other things like telephone bill and other things. Then property, municipal tax receipt. PPO is a pension payment order with the address. Then letter of allotment of accommodation from the employer in case of government departments, PSU banks or the listed companies. Introduction is not at all necessary for opening of the account. For any account opening, introduction is not required. Here remember, where the present address is different from the official address, we have to give the within 3 months the proof of new address to be given. Then we have the small account where OVD is not there. Earlier it was a full KYC compliant account. Now OVD is not there. So what will be taken as a self-attested photograph and a self-attested address. Now there will be some restrictions to the account. These accounts will be, the maximum balance will be 50,000 at any point of time. Total credits in a financial will be 1 lakh. That is in a financial year. Then withdrawals and transfer, that rupees 10,000 in a month. Then foreign remittance is not allowed in these accounts. These accounts are valid for 12 months only. But 12 months grace period can be given if the customer will give the proof of applying for the OVD. These accounts, then we have a BSBDA accounts. BSBDA accounts are the full KYC accounts. See, some small accounts are not fully KYC compliant. Those customers don't have the OVD. Now BSBDA is a basic saving bank deposit account, full KYC. There are no restrictions. as in small account. There this account is opened and maintained with zero balance. No minimum or maximum restriction is there. No restriction on credits in a year. No restrictions on a credit withdrawal in a month. And KYC rules applicable as normal. As if it is a small account, then small account KYC, then there will not be a KYC rules application. Restrictions are there. Any customer can open only one BSBDA account with one bank only. If other SB accounts in that bank are there, that need to be closed within 30 days. Then accounts opened under Pradhan Mantri Jan Dhan Yojana. These are a mixture of small accounts and the BSBDA accounts. Remember, there is no such category or a new category made under Pradhan Mantri Jan Dhan Yojana. This is just a mixture of the existing small account and the BSBDA account. This question can be asked. One more important point here in BSBDA is that only one account can be there. If customer has more than one account, then that need to be closed within 30 days. Then we have a foreign student. If a foreign student is coming to India for study purpose, then type of account that could be open will be NRO, that is non-resident ordinary account. The documents required will be copy of the passport with visa, recent photograph, letter offering admission from the educational institution. If Pakistani or Bangladeshi student is there, then we need to take RBI permission. Proof of local address within 30 days of opening the account, proof of local address to be given. For the first 30 days, there will be a restrictions on the account. For the maximum credit, it is dollar or dollar equivalent 1000, and maximum withdrawal is rupees 50,000. Remember, credit is the dollar equivalent 1000 and withdrawal is the rupees 50,000. Then we have the non-face-to-face customers, OTP based KYC verification customers who has opened the account without visiting the branch. For them, accounts can be opened. For these accounts, some restrictions will be there. Balance of all deposits will be 1 lakh at any point of time. Total credits in a financial year will be 2 lakhs. Term loan can be given rupees 60,000 in a year. Validity of such accounts is up to 1 year. How to remember this? In small account, everything just make it double. Like in small account, balance at any point of time was 50,000. Here it is 1 lakh. In total credits in a financial year was 1 lakh. Here it is 2 lakh. That account is also valid for 12 months with a grace period of 12 months. Here no grace period is there, but this account is also valid only for 12 months. So remember, if customer is not visiting the branch, we are opening the accounts, but there are some restrictions, like not those, these are fully KYC accounts, but some restrictions are there. Then if a customer is transferring the account within the same bank, fresh KYC is not at all required. If customer already KYC is done, then new KYC is not required for transferring the account within the same bank. Periodicity to update the risk, that is for the high risk customer it is 2 years, medium risk customer 8 years, for the low risk customers it is 10 years. If the individual customer, if there is no change in the KYC information, a self declaration from the customer in any form, like through email, mobile number, ATM, digital channel, letter, SMS, anything, like any confirmation from any communication from the customer side is suffice. Same as in a change in address. And for the minus, then we have the customer other than individual, the same thing, like only self declaration from the customer side is more than enough. Whenever KYC is updated, bank has to send a message or advice to the customer that your KYC has been updated on so and so date. This is as per the RBI. Then non-compliance of KYC requirement. If the customer is not giving documents within the 6 months of the bank's notice, then partial freeze will be done. Partial freeze means only credits are allowed, no debit is allowed. If after 6 months of partial freeze still customer has not given any the KYC documents, complete freeze will be done. Means a customer will not be able to operate the account. That no credit, no debit. Then we have the just give me a second. This partial freeze, complete freeze. Then we have monitoring of transaction, maintaining records. As per PMLA Act, reporting need to be done to Financial Intelligence Unit India, that is FIU India. It comes under Ministry of Finance. There are 5 types of reports: cash transaction report, counterfeit currency report, suspicious transaction report, cross-border wire transfer report, and transaction by non-profit organization. All these reports need to be reported to the Financial Intelligence Unit India monthly by 15th of the succeeding month. Okay, it is common for all, 15th of the succeeding month. Then cash transaction report, if the cash receipt or payment is more than rupees 10 lakh, remember it is more than rupees 10 lakh, not equal to. For 10 lakh need not to be given. For more than 10 lakh, report to be given to the Financial Intelligence Unit India by 15th of the next month. For the counterfeit currency report, there is no amount specific. Whenever the counterfeit currency is impounded by the bank, the report will be given. If it is not impounded, then nil report will be given. Then there is a suspicious transaction report. Whenever the suspicion is confirmed within 7 days of the confirmation, it is, remember here, within 7 days of the confirmation, that report to be given. If there is no suspicion, then nil report will be given. Then cross-border wire transfer, here the amount is 5 lakh. Remember, in cash transaction report and transaction by NPO, that is non-profit organization, amount is 10 lakhs. In cross-border wire transfer, amount is 5 lakhs. Then we have central KYC record registry. That is a KYC document to be uploaded on CKYCR, that is Central KYC Record Registry. It is mandated by the RBI. It should be done within 10 days. Maintenance and preservation of record as per KYC. Transaction records to be maintained for 5 years from the date of transaction, not from the date of opening the account. It is from the date of transaction. If account has been closed, then from the 5 years from the closing date, not from the account opening date, when the customer cessation has been cessation of the account has been done, that is customer has closed the account. And identification of the customer and address minimum 5 years after close of account. Then FATCA is the Foreign Account Tax Compliance Act. If individuals with 50,000 is the limit, 50,000 is a dollar amount. Okay, then entity is a $250,000, that is $250,000. Then OFAC is a Foreign Office of Foreign Asset Control. Remember, for individual 50,000, entity $250,000. These are the FATCA reportable accounts. This reporting will be done by the CBDT. CBDT is a nodal